incomplete record. So basically the scenario here is somebody who is running a business doesn't keep very good set of accounts. So from that we have to work out, well, how much profit did we make and how much is the business worth, but we're going to have to do that by deducing from some of the information, basic information, like what cash we have at the beginning and the end, what payments we made, and what assets we may have at the end. So we start off by doing our rough work. So on the left hand side here we have the blank document that we're going to fill out, and we've got the basics of a balance sheet. So the rough work, there's 4 different pieces of rough work. So the first one we have to work out is what is the balance that's going to be left over in our bank account. Now they've given us here the cash receipts and cash payments. I tend to separate out the cash receipts, or sorry, the balance from the rest of the cash receipts, because I'll need that for later on in the question. So my cash balance at the beginning is 4,000 in this question. Take 4,000 away from the other receipts and I end up with 90,000 for receipts. And then we're going to take away our payments, which is 88,000. And our closing balance then is going to be those 2 numbers taken away. And then we're going to add to that the opening balance that we had at the beginning. So 6,000 is our closing balance. The opening balance of 4,000, we put in the second piece of rough work we need to do is we need to work out what's the capital, how much money has been invested in the business. And that money that was invested in the business was used to pay for assets and liabilities that the business has. So down the bottom of the question, we've got some information that's relevant to this. So we've got premises, motor vehicles, we've got a number of different assets at the beginning and the end. So we're starting off with the assets at the beginning. So we had premises of 90,000. We had motor vehicles of 40,000. We had stock of 4,000. We had the cash figure of 4,000 as well, which isn't mentioned in this list. We need to include that in. General expenses due, that's a liability, so I'm going to put that in with the liabilities. Debtors and creditors. So debtors is 6,000, creditors is 4,000. So debtors is 6 and creditors is 4,000. So now what we do is we add up all of our assets, add up all of our liabilities, and find the difference, and that's our opening capital. Okay, so that's the figure we have for capital. Now move on to our control account rough work. Now this control account is, the reason why we're doing it is to try and work out what's our credit sales and what's our credit purchases, because you'll find that there are some cash sales and cash purchases, so we need to find the credit ones because we owe money for those. So we do that by using a control account. So we start off with our debtors at the beginning and our debtors at the end. So opening debtors is 6,000. Our closing debtors then is 7,500. And sorry, wrong place, 7,500. Our creditors then, our opening creditors is 4,000, closing 6,300. So 4,000 is the opening creditors and 6,300 is our closing. So when we put in our bank figure, we should be able to work out our credit sales. Now the bank is the amount of money we received from debtors. So we received 30,000. Well, if we received, not 3,000, 30,000. If we received 30,000 and we had an opening balance of 6 and we have a closing balance of 7,500, well, the difference between the two sides, the missing figure that we have here should be credit sales. So when we're balancing, we know our two totals have to be the same. So if we take the credit sales, sorry, the balance, the opening balance we have away from our total, that will give us our credit sales, which we can then put in over here. Okay. And then we're going to do something similar with our creditors control to work out credit purchases. So look for in my cash payments, I see creditors is 20,000 as mentioned there. So we've spent 20,000 on our creditors. So if we balance that account, so we know that we must have 26,300 on both sides. So that means the difference must be our credit purchases. So 22,300 is credit purchases. Now, while I'm at it, I can then go and start doing the rest of this account, but there's my 4 pieces of rough work finished. So now what I'm going to try and do is be systematic and go through all of my receipts and payments, put them into the document, and then see, can I finish off the overall document. So I've dealt with my balance and I've dealt with my debtors. So now I go to my sales. So this sales will be the cash sales. So we can put that in there. So that means my total sales figure is going to be those 2 numbers added together. My opening stock. So opening stock is given here as 4,000 and closing stock is 5,2. So 4,000 opening stock and closing stock is minus 5,2. And I'm going to put the closing stock down here in in my current assets. Back to dealing with cash receipts and cash payments. We've dealt with all the cash receipts now. Now let's look at our cash payments. So we have 16,000 for general expenses. Now there's dues to be taken into account as well. So we have general expenses due of 300. Now that was due for last year. Nothing to do with this year, so I'll take that out. It means we spent 300 this year. That wasn't for this year, so it's not an expense of this year's expense for last year. That's why it's a minus. And we have a look and we see that there's a general expenses due of 700 at the end, so we're going to add that on. So that means the real general expenses figure is going to be all of those added together. So 16,300 minus the 300 plus the 700. Now, so that's general expenses. Purchases 35,000, so that's cash purchases. So now we can add our 2 purchase figures together. Now, so to get our goods available, then we'll have our opening stock plus our real purchase, our total purchase figure, take away our closing stock, and that gives us our cost of goods sold. And then we'll subtract our cost of goods sold away from our gross profit, or for our sales, sorry, and that will give us our gross profit, 35. Fantastic. Now, our expenses. So we got wages here is listed as an expense. And I just want to see, is there any other expenses? Oh no, I bought equipment. So I'm going to put my equipment in here with my fixed assets. So I spent 2,000 on equipment. Okay. Creditors and debtors, creditors I've dealt with. Drawings. So drawings is the owner taking money out of the business for their own use. So I'm going to put that number down the bottom in finance by. So this member is a sole trader. So what we'll have is we'll have our capital, less drawings, and add our net profit. That's what you'll always have. That's the standard layout you'll have. The only other thing that might appear here in finance by might be maybe if they took out a loan of some kind to pay for something longer term. But in this case, it's not. I don't see any mention of a loan, so therefore I don't put it included. So my drawings is 7,000. That's going to reduce the value of my capital. Okay, so I've got that dealt with there now. Now there's no other mention of expenses, so I'm going to add my 2 expenses together, and I'm going to subtract that. Now is wages 8? No, wages 8,000. So I added an extra 0 there. So my net profit then is 35. So that's my gross profit. Take away my total expenses. So there's my net profit, and I'll put my net profit. It's been included down here, so we'll add that together. Okay, so that's the capital employed. Now let's go to finish off the rest of the question. So what we have down the bottom of the question is information that's relevant for my closing balance sheet. So premises, now I'm just quickly checking, premises hasn't gone down in value or anything, so there's no depreciation. The same for motor vehicles, no depreciation, that wasn't included as an expense. If it did go down in value, I'd need to add that in as an expense and reduce the value for my fixed assets. But it hasn't happened. So in this case, we've got 90,000 premises, hasn't changed, and we've got 40,000 for the motor vehicles. So now we can add all those together. Now, my current assets, just quickly checking, is there anything else here that could be a current asset? So general expenses due, put that in there, that's a current liability. Stock 5.2, I've put that in as I was going along. Debtors 7.5, I put that in when I was doing my control account. Creditors 6.3, I've put that in when I was doing my current liabilities. So now I can add these numbers together. There. So my working capital then is those two taken away. Okay, and in this case, my balance sheet does balance, so the question should be correct. Now, my piece of advice to you, if it turns out your balance sheet doesn't balance, so if I just said, for example, if I put in here the wrong number, okay, and I go and add up my balance sheet to see there's a balance, and it turns out no, I notice there's a difference. What I always do is spend 1 minute at this, find the difference between the two of them. So I'm out by 1700, and I'll have a read through the question. Is there anything worth 1700 that I didn't put in? Or maybe I'll put it in as a minus rather than a plus, or vice versa. So maybe 1700 divided by 2 and see, does that feature in the question? If you can't see it straight off, leave it after 1 minute. Don't spend any more time. You don't have time in the exam.